Starting off this segment on the global oil market as prices were higher in the afternoon of Asia trading hours, with international benchmark Brent crude futures up 0.84% to $62.67 per barrel. U.S. crude futures gained 1.02% to $59.25 per barrel. Investors are focused on indirect talks between Iran and the United States as part of negotiations to revive the 2015 nuclear deal. And there is an assumption there is going to be a flood of Iranian oil in the market. Analysts expect U.S. sanctions, including restrictions on Iranian oil sales, to be lifted only after these talks are completed and Iran returns to compliance. Iran has already boosted exports to China despite the sanctions. Oil has recovered from historic lows last year with the support of record OPEC plus cuts, most of which will remain after July. Demand is expected to recover further in the second half, while a slow vaccine rollout and return to lockdown in parts of Europe have weighed. Figures on Friday showed the U.S. economy created the most jobs in 7 months in March. And joining us now for the commodities market update is Bolande Abaje, one of the research analysts with Financial Derivatives Company. Good morning, Bolande. Good to see you. Good morning. Thank you for joining us. All right. Well, on Friday, or last week rather, when OPEC Plus decided to relax their production cut, we saw oil price, go down. But this morning, we've seen the prices come up again because of U.S.-Iran's nuclear talk. Now, is this trend what we're likely going to see in the oil markets in the medium term?
Yes, so Iran is increasing its oil supply despite the sanctions that are already in place. And although we don't expect the relationship between the U.S. and Iran to be as tough as it was with the previous administration, and we do expect that Iran's supply would increase in the future, in the medium to long term. But also, more importantly, the fact that OPEC Plus is, easing, on their output cuts has detrimental impact on, the supply.
Oh, okay. I guess we have to correct something there. We're talking about that.
Well, the decision from OPEC Plus, we're also looking at how this will affect, especially the Nigerian market, the decision to increase production and how it will affect prices. And
there are also other issues of the U.S. dollar index, and in fact, the job data also came out. That was on Friday, and it's actually looking good. The unemployment rate in the U.S. has also
more jobs were created,
and I guess all of these are going to have some kind of impact on the commodities space there. Well, Bolande, you were talking about, of course, the Iran talk and all of that, and then I just mentioned U.S. dollar index this morning was actually rising, and on Friday, U.S. was reporting a great job data there, unemploment rate. Unemployment rate down.
Yes.
And of course the services index, going up. So, are we going to see all of these have some impact on the commodities market space, particularly oil?
Yes. Just because when you're seeing a recovery in the U.S. economy, then it's great on the side of the demand that would build up as a result. It seems like everything is moving in the right direction, and even as fast as one had expected, just because there's direction when it comes to this new Biden administration. And once you have increased stimulus within the economy, then the positive impact of that would be, increase in jobs. Most businesses feel secure to employ more people, and there's, more increased output within their sectors. But on the other hand, you're looking at also shale producers, oil prices trading, at a very nice level, and it's more or less calls to question whether they would, continue to boost output, which is negative on the part of oil.
How do we expect this to affect Nigeria? I mean, Nigeria's main export is oil. How will it affect foreign exchange?
It will definitely affect us, just because, currently, I think our production has currently increased, and with the easing of the output costs, we expect to increase our, level of production, hopefully to the levels that we had seen, previous years, 1.8 million barrels per day, which is great. But in a case where you're also having, lower prices at the same time, that would, more or less even out the impact of, or more or less not increase our foreign reserves as much as we would like. But I think OPEC Plus, they've done a very good job at the moment. The World Bank also released a report by increasing, Nigeria's growth forecast for 2021, highlighting that, we faster than expected, faster than expected growth in commodity prices more or less supported, this. And obviously the fact that COVID, didn't really impact, the most sub-Saharan African countries the way it did in the western part of the world.
Well, even though we're seeing the vaccine rollout, but at a slower pace, and then we've also had some countries reporting rising cases. For instance, India.
Yes.
India is trying to deal with the rising cases of COVID-19.
Yes.
And of course, this week, the Reserve Bank of India will, of course, be meeting for their MPC. Looking at all of that, would that also be a consideration in the oil market?
Yes, definitely. As much as China is, when you're looking at the highest demand for oil, you're looking at China, but then you're also looking at India as well. India is still trying to fix up the economy. I think most people are with that impression that, once you get the first dose of the vaccine, everything is fine. And, a lot of people have been misunderstood when it comes to that. But they're literally drawing down on, I think they're supposed to impose new lockdowns within the economy to kind of, curb this growth in the number of cases within their country.
Well, we saw World Bank, like you mentioned, commodities, maybe the impacts of COVID-19 on commodities was not as much. That's why the IMF is reversible. What other factors do you think? I know the IMF did say that US and China will drive faster recovery, but back here in Nigeria, what factors do you think are going to help Nigeria that even made them to reverse this growth rate?
Yeah, so spending on infrastructure is one key thing, education. Currently, looking at Nigeria specifically, most of our challenges has to do with inflation rate, unemployment, which is currently at about 33%, which is not great. A lot of, new entrants into the job market. When you're looking at, the people that have left, universities for the past 5 years since President Buhari took over, you've seen that 80% of those new entrants or new individuals within the economy are unemployed, and that is more or less wasted resources within the economy. You're having challenges when it comes to the manufacturing sector as well, high cost environment. All of that is, more or less playing to our own recovery. As much as oil price is doing what it does best, the World Bank more or less highlighted specifically for sub-Saharan African countries, agricultural growth is important. We've done a lot when it comes to, boosting or other sources of, forex within the economy, but we still have a long way to go. And that also depends on, the direction of spending within the government, and also, the debt burden as well. The fact that, more or less revenues are tied, and it forms like a huge challenge within the economy.
Yeah, talking about the manufacturing sector, the FBN Quest PMI came in slower than it was, from 53 to 51, still above the 50 points. But what does that tell us about what to expect as regards the GDP?
Yes, so the PMI is definitely a leading indicator. It's more or less like what investors and other, economic analysts look at to what would point at the direction of growth within the economy. So definitely, as much as, the PMI released for March is still an expansion because it's above 50, it's still a contraction when you're looking at the previous month. And obviously that calls to question the situation of the economy, the high cost environment, like I mentioned, high transportation costs, the fact that, a lot of these manufacturing companies, I feel like their revenues are really squeezed, and they've decided to contract some of their, spending.
So how would all of these impact commodities prices?
So commodity prices, we do expect that commodity prices would have already started increasing generally. I think 80% of our commodity prices on our on the list that we do look at has increased, and we do expect this to continue in that trajectory. We have Ramadan season coming, as from next week. That should play into, increasing commodity prices as well. We also have the fact that, the foreign exchange has remained stable at 485. That hasn't, showed any sign of improvement. And so when you have all of that playing into the situation, and also the planting season that we were seeing at the moment, that also has detrimental impact on our food reserves, which are already depleting.
So we saw cocoa price climb in Ondo and Delta State. What's driving this? What do they have in common?
Oh yes, so it's not just Ondo, and it's more or less the southwest region, which forms about 80% of our total Nigeria's total cocoa production. And what's played into this is the fact that we had little to no rainfall in the past few weeks. We've obviously, in the month of February till like the beginning of March, we saw an increase in rainfall, which had which was looking positive for the mid-crop harvest. But lately we haven't seen any rainfall, and that has more or less affected the development of the cocoa trees and would more likely reduce the production of the mid-crop harvest.
All right, let's look at the price movement. Sofa, can you take us through that and their driving factors, and of course what that would mean for inflation trajectory?
Yeah, so obviously from what I mentioned, inflation is currently at about 17.3%. We do expect this to follow through, because we haven't seen the CBN come to increase interest rates to taper this down, which is imminent. And so flour, the price of flour has increased to about 15,000 naira per 50 kg bag. We've seen the price of major staples like gari, rice, they're more or less on that trajectory. Like I mentioned, with the Ramadan season, it's the types of food that would be consumed more during this period, and the increase in demand as well has also played an impact on the increase in prices of these goods. So in the medium, at least for the month of Ramadan, and the fact that planting season is still, making the situation worse, we do expect that, domestic commodity prices to remain, significantly higher than what it was in the month of February and January.
All right, thank you very much, Boladu.
Thank you so much.
Thank you so much for having me.